James,
Ruff.
you're a long way away.
Yeah.
You've got a sharp new haircut, though, I've noticed from this distance.
Thank you. I appreciate that. I did. I got a haircut on Friday. I just want to, I don't mean to put you on the spot,
Oh, God.
but mere minutes ago, you said something that actually shocked me. You said that watching movies is good.
I didn't say that. I didn't say that.
What did you say?
I said they can be quite experiential.
Yeah. That's what I've been saying for years.
No, I mean, I just mean like loud.
Yeah.
You know, they sound quite, you know, they take you aback with their the volume and color and movement.
I went and saw Christopher Nolan's The Odyssey, the hot new movie in the cinemas right now.
Everyone's seeing it.
Everyone's seeing it. I went and saw it at the IMAX in Sydney. Just a fun little story. Packed screening, 9:00 at night, right? Movie's pretty good. I enjoyed it. That's my official review. It was pretty good. The guy that sat next to me at the cinemas, when we came in, he was probably in his 30s, mid-30s. He clearly had some, he was experiencing anxiety or something. He had an iPad and big headphones or whatever.
Okay.
And he was talking.
Why would he go to a movie with?
Well, I just he was doing that before he watched the movie, right? And he was sort of talking to himself to be it's all going to be fine. It's all good. No worries. And I was like, oh, he's dragged himself out of the house to see this movie he really wants to see. And, I find that,
that is good. That's admirable.
That's admirable. I feel sorry for him, but I'm touched by it. And then when they were showing the production companies before that, it came up with Christopher Nolan's production company. And as soon as that popped up, he said in a super deep voice, "Let's rock and roll." And I was like, "You've lost me, bro. You fucking lost me."
You were no longer on his team.
I wasn't on his team anymore. All right. Well, actually, this is good. It's been a while since we've had
a blow up.
A blow up. That's exactly what I was about to say. We haven't had a blow up in a while.
Yeah.
I don't know what the last one we talked about was, but this one has an FTX connection as well, which is why that was a classic down around blow up that we covered. But we're talking about Leopold Aschenbrenner.
Yeah.
The AI investment wunderkind.
That's the word that keeps being said, isn't it? Wunderkind.
Wunderkind, because he is German. He's German and he's 24.
But he speaks with a British accent.
Yeah.
With that kind of pan-European British kind of thing.
Because, you look into it, he was born in Berlin, but he went to the John F. Kennedy School in Berlin, one of those weird American schools. Weird guy. We'll get into it. He's an unusual character. But yeah, 24 years old. His fund, Situational Awareness, basically just imploded.
Yes. And not only did it implode, it was seemingly behind at least an element of some of the machinations of the stock market over the last few months, both highs and lows.
Yes.
And somewhat responsible for the last kind of week or so, crazy movements in chip stocks, insane movements.
Yep.
Not the only one. Probably responsible for some suicides in South Korea. I'm going to go out and say it.
Yeah.
Content warning.
Yep.
Korean suicides.
The Korean markets have been struggling.
But chip stocks going down 30% in a day and then rebounding 30%. We'll get into it all. So Leopold Aschenbrenner. First came across him, I think... I mean, I might have seen him around the internet, but it was the Dwakesh podcast, I think, interview.
Yep.
I feel like was the first time I came across this bloke.
Yeah.
Because he's an interesting looking unit.
I was wondering how long it'll be before we address the elephant in the room, that he's an odd looking guy. He's got a real 19th century look about him.
Yeah, kind of the look of an aristocratic family that maybe doesn't marry outside their kind too much.
Exactly.
Dare I say.
Yeah, there's a Habsburgian affect to him.
Yeah, exactly. It kind of describes him quite well. Anyway, so the bloke is a wunderkind. He graduated top of his university at age 19.
Yeah.
This kind of thing. Joined OpenAI.
Well, joined FTX.
Oh, FTX. We should mention first, of course. Joined FTX. He ran their philanthropic investment arm. Is this correct?
It was called FTX's Future Fund. Now, it's not the Australian government's sovereign wealth fund established by Peter Costello. It had bigger dreams than that.
It's not that.
Okay, so backdrop, effective altruist. This guy is an effective altruist, and that's obviously what we've talked about on Down Round, but he's from like that real core thing, which is like we're going to apply systems level logic and thinking to charitable giving and philanthropy, and we're going to make the world actually better through our giving. We're not going to give it to empty woke causes. We're going to actually leverage our money to do good things. This is what Sam Bankman-Fried at FTX was really into.
We're going to do the most good with the money.
And this was part of Sam Bankman-Fried's self-justification for accumulating a bunch of crypto money, which turned out to be, to some degree, fraudulent, is that he was like, we talked about this on our episode all those years ago. I'm accumulating all this money so I can spend it on stuff that takes humanity to the next level or whatever.
Yeah. That will save us from the robot apocalypse / save the
malaria / whatever.
Yes, exactly. Like do the most possible good, which, as we've discussed before, you can really wind yourself into some like interesting justifications when you're like start saying things like there will be an AI that possibly destroys all of humanity. Therefore, anything we do to stop that is effectively justified because that is ultimately us using our money in the most efficient way possible. Like, don't worry about education, funding education in poor neighborhoods. That pales into comparison to all of humanity dying.
Yeah.
Like, why are you talking about education when all of humanity will die due to an AI,
a robot,
etc.?
Yeah.
I mean, obviously oversimplifying, but effectively that's it.
But he ran the FTX Future Fund and very cannily exited FTX prior to the collapse. So his hands were clean. We can all say his hands were clean.
Sure. Then joined OpenAI in the super alignment, in the alignment team.
Yeah. It was Ilya Sutskever and that guy, I'm going to say Jan Leike. I can't remember. I don't know how to say it. Leike. It's like a Swedish or whatever.
Okay.
He now works at Anthropic. And obviously Ilya Sutskever works at Safe Superintelligence, his own thing. So it was like he was part of that team, which I don't believe exists anymore. It was like, it was Super Alignment was the team. It was called the Super Alignment team. And again, it was effective altruist tinged thinking about how we're going to avoid robot apocalypse.
Basically seen as like super smart guy or whatever. So he then got booted for leaking internal information. I actually am not fully across this. What are the ins and outs of this?
So two things happened. The first one is that Leopold took a stand internally about what he saw as like sovereign risk, or the idea that OpenAI was vulnerable to being compromised by like Chinese agents or whatever. Now, there were national security problems that weren't being properly addressed at OpenAI, or risks, which apparently, according to reporting, he made this big stand about it. As a reminder, at the time this is happening, this guy is 22 years old.
Yeah.
I ain't listening to a 22-year-old.
Tell me about sovereign risk?
Yeah.
Absolutely not.
Yeah, exactly. So apparently that put a bee in a few of the senior management bonnet that he created. He had this whole big internal stand about it. But then, yes, he got done for leaking information. His argument was, I was just sharing some documents to some external researchers that weren't even a big deal. And actually, I think that you're sacking me because of this stink I kicked up about the risk from, foreign agents or whatever. It's all very murky. But basically, I think he did concede that, he shared some confidential documents with researchers as part of his own weird little, I guess, San Francisco polycule shit. is my assumption. Yes,
sure. Allegedly. So he's fired. A week later, he's penned a 165-page treatise on what AI is going to do.
Yes.
Called Situational Awareness.
Yes. You can go read it. I remember, this is actually my first exposure to him when I read that piece. I say piece, it's very fucking long. And essentially, his argument was, if you're in San Francisco, I mean, the opening lines was something like, if you're in San Francisco, you can feel the fucking energy in the air. Something's changing. AI is here. The whole point of this 160 pages of essay was all these companies are, this is what, 2024, I think, this landed. They are accelerating towards recursive self-improvement, which we've talked about in the podcast. It's this idea that an AI that can train the next generation of AI. And once you get that loop firing, you compress decades of progress into months, and all of a sudden,
you've got takeoff.
You're in takeoff, baby. And the whole world is changed. Now, that was, people used to say recursive self-improvement as kind of like a warning. Like, it was often talked about as like, we want to avoid a situation where that's happening and we don't have alignment or control.
Because we'll be walking around going, while the computers are just doing God knows what.
Yeah, exactly. Who knows what the computers have to do. But now, like, OpenAI has a recursive self-improvement team and whatever, and all these labs are giving hints that they're in the early stages of it, and they're saying in a very positive way. The idea that, we're in takeoff. Anyway, so that was like the big thing. He did this essay. After he wrote that is when he ended up going on shitloads of fucking podcasts.
Yes. The essay went off. He goes on a bunch of podcasts, and that's when, like, the hagiography begins.
This guy is a genius.
This guy is a genius. Like, I couldn't stop seeing him for a period. Like, there was just like...
Again, because he's weird looking.
That too, yeah. You notice him when he pops up.
He stands out in a YouTube tab.
Absolutely. And like, but the clip farms, but I think organically, not like paid. I would just see clips of this guy talking about how the world will change and using terminology like we a lot. Like, he would say, like, if you're a doctor, we're coming for you. Basically saying, if you make this kind of software, we're coming. Like, it's changing. The world is changing fundamentally right now. We're in takeoff, basically. Very hyper bullish kind of AI stuff.
Yeah.
Now, he then made a series of, I would say, quite intelligent bets with his own money on investing in the stock market in certain things, like before they came. Long, for example, memory companies.
Yep.
But also like battery tech or certain like power technologies, and like long a bunch of kind of semiconductor, but like downstream distributors to semiconductor companies. This is post NVIDIA blowing up and like finding value in a bunch of these kind of downstream companies.
Basically, his investment thesis, and he was coming from being a guy that had no real experience in investing, was, what if I'm going to invest as if everything I just said in this essay that everyone read was true. And the fund he started, Situational Awareness, has the same name as the essay.
Yeah.
And his idea was, this stuff is happening. It's coming down the pipelines. You can't stop it. There's going to be a build out. I'm investing in every product that touches that build out.
Yes.
In a very, very like single-minded thesis way.
Yes.
I'm not diversified. This is what's happening.
Yeah.
And I'm getting on the rocket.
And now, keen down round listeners will know
we actually have a very similar thesis.
We have an extremely similar portfolio, but we did it as a joke.
We did it as a joke, and I think, I'm going to flag it early before we get into the meat of it. We were not 600 times leveraged.
No. So, keen downies will know that obviously a lot of people do annual subscriptions for Down Round.
Yep.
That money is like deferred revenue for us. We don't spend when you pay. It's a very good value. What is it? $90 or something like that?
Yeah. Yeah, like $90 a year or something.
Yeah, we don't spend that 90. Like,
guys, you should, if you're not on it, get on it.
Yeah,
now.
Get on it. That's such a good deal. Something along those lines. Might be 190. I think it's in the 90s. 98. Maybe it's 98.
It's 90.
It's $90. $90. That's nothing. Australian dollars as well. If you're American, that's like $50, $60.
You know what? 95. I'm thinking
somewhere
anyway,
around
whatever.
Like this is not a lot of cash for the level of alpha, as I'm about to explain. Now, I've said this before, but I have sympathy, but limited sympathy. When you hear something like, whatever, like Tweetbot or whatever, Twitter has booted them from the API, or it happened to the Reddit ones or whatever. Now all of a sudden, like, don't ask for a refund. This is what's coming. Don't ask for a refund. You'll like send them broke. They don't have the money because they spent all your annual subscriptions. We don't do that here at Down Round. No. We use proper GAAP accounting practices, and instead, if you've paid your $90, we'll take $9 of that. The next 81 we put into a stock account and YOLO it into a similar portfolio to Leopold.
Liam, again, We look a little bit more normal than him. We're less leveraged, but we're in the same universe as this guy.
I'll read. I chucked both his portfolio and our portfolio into Gemini. Again, I'm fucking reading AI again. It's becoming a habit, which I'll probably stop at some point. Portfolio comparison, AI supercycle. The Gemini portfolio was similar to Leopold's. Yep. Maybe I'll get into the comparison a little bit later of where we both stand.
Yeah. And look, there are some differences in scale.
There's some significant differences in scale.
Yep.
A couple zeros.
Well,
probably.
I mean, we should actually say, because if someone has no idea what the hell is going on, we may as well say what actually happened here.
Exactly. I was going to get to that.
So again, this guy has leveraged himself to the hilt, and for people who don't know what that means, he's borrowing a lot of money, essentially.
Yeah. But he started investing his own money, but started a hedge fund. People started investing in this Wunderkind.
Exactly. The Wunderkind started receiving external money, external capital from all different people who believed his thesis, read his essay, and said, this guy knows what the fuck's going on.
Yeah.
Smart kid. Smart, little weird looking, but I believe what he's selling. Anyway, so the fund ballooned, right? So many billions of dollars.
Tens of billions of dollars.
Yeah, I think it was like, it was over 20. It might have been more than that at peak. Over 20 billion. Now, much of that was, or a big chunk of that was public equities. So as we said, he's investing in all these chip stocks and batteries and whatever, everything that's associated with the data center build out. But he also had, as part of that, private stocks.
Yeah, he was an early investor in Anthropic.
Yeah, exactly. So he had Anthropic stock.
Not that early, but early enough.
Which had ballooned massively, right? Basically what happened is the classic story, and we haven't gotten the full details of this yet. Some reporting's come out. But it sounded like he was basically starting to get hammered by margin calls on some of these bets he had made.
And so basically the entire portfolio was long semiconductors and affiliated and short software. Something the down round is not. No. We're not short anything. Side note, not financial advice. I think it's just a stupid idea to short things. Thinking of his portfolio and the down round portfolio, because I know it pretty well, it's like, things like Hynix, whatever, like you're getting 5x, 10x returns on these things. Shorting something, unless you're leveraged, like you can only double your money, quote unquote, if it goes to zero. These companies aren't going to zero. Like the sales forces of the world aren't going to zero, etc. Yes. As well as it just being like so hard to pick.
Exactly. And
it's like to pick in a time where like there's heaps of money around and not in a recession or anything to be betting against a company, Jesus, that's risky. But anyway, he was, as you say, super leveraged, took on heaps of money. I'd say fairly intelligent longs.
Intelligent longs. But I mean, also
and then
on the
short,
short software. Also on the shorting thing, as we've been trying to like pick through it down around, I think directionally software has problems. Yeah. Obviously with the SaaS apocalypse and everything, a lot of these stocks are heavily depressed. But like even we've been like, are they really doomed in the short term?
Yeah. Are they doomed or are they just going to see some, some margin compression?
Yeah. They're trying to do stuff.
And yes, their valuations are compressed because like they're no longer like these massive growth stocks but with like huge moats. But like, we're not talking about.
It's a very and I guess props to him. He's very autistically focused on, no, this is my thesis. And because he had in his essay, he basically said he assumes recursive self-improvement is going to happen in 2027. So like his timeline is, 12 months from now,
yes,
the world will be unrecognizable. So you can guide it. If you really believe that, I guess it makes sense what he was doing.
Yeah, I mean, and then the flip side is like as Zitron was 2026, we're going to see the bubble pop.
Yeah.
One of these two gentlemen will be right.
That's
or neither.
Or neither.
Or neither, and down round will be right. And we just muddle along.
Folks.
There you go. Pick your champion.
So anyway, he got crushed.
But I should say, people are also saying that a lot of the run-up this year, like in the last few months before that, could also be those periods where he was taking on massive leverage and investing heavily in semis. Like of stocks like SanDisk and whatnot, he was somewhat responsible, or they could have been, for a lot of the buying.
Yes.
Basically there.
Yeah, a lot of these weird movements are from as the whole thing was starting to tip over. And he was making all these moves.
So then, like a couple of weeks ago, or more than that, we've had a bit of a reversal in semi-stocks in particular.
Yep.
And there was a cascading effect. Some of it is certainly due to him having to unwind a bunch of positions. Well, not even necessarily unwinding, although that was apparently happening. And also, over the last few weeks, what we've seen is as people move away from these AI stocks, they put them back into the old stocks. They put them back into SaaS. They put them into Apple, companies like that. Like the money is moving around between these two things. So because he was leveraged and he was short the other side, he was getting hammered and margin called to the point where it basically looked like his fund was about to go under.
Yep.
And the rumors of his fund that's like highly long all these AI stocks going under was also increasing the pressure. And I think that's probably what led to that huge sell-off that hammered South Korea. I say South Korea because famously like SK Hynix, like these RAM stocks got absolutely hammered, of which he was long, of which down round is long but not levered anymore. Huge sell-offs in the South Korean market. If people have been seeing the news, it's like, 6% of all males in South Korea got margin called.
That can't be good. You can't have a society operate on that basis. You need to leave that to the Leopold Aschenbrenner. The guys look like him.
Yeah, exactly.
Leave them to margin call.
And so in the background, he almost did a what was it like? Not funding secured. What was the FTX thing? Like all funds are secure or whatever that Sam Bankman-Fried, the famous thing.
Yeah.
He sent out a letter at the end of last month saying like, there's going to be some rough times. There's going to be some good times. Right now we see this as a great buying opportunity. In the background, he basically was trying to offload all of his levered stocks.
He was freaking the fuck out.
Which he did in the end, he made a deal with Citadel and basically transferred all of their leveraged portfolio, which sent the markets pumping again. Should I say it? Not unlike Sam Bankman-Fried.
Yeah, no, that's
except
true.
In this case that everything pumped literally because everyone found out like, okay, good, he's not going to tank the market.
That's right. Yeah. So it all got sold off to Citadel. That's Ken Griffin's fund. He is we're not going to get into Ken Griffin. He's always around. He was like a player in the GameStop stuff. He was like seen as a villain by a lot of those Reddit guys, but he's a complete fucking shark. Ken Griffin is like, he will identify spread everywhere and annihilate it with his team of like math freaks.
Well, they were even saying Jane Street was also another one who's not typically just like a long equities fund, right? Yeah. Like this is like high frequency / silly buggers stuff.
Yeah.
Like the people involved in this, I think, knew what was going on to the point where I'm sure at Citadel in their spreadsheet, they were like, us buying this literally is probably going to cover anything we paid. You know what I mean?
Yeah.
Like they would have known that a pop was going to come just from them taking it off his hands.
Yeah, totally. We don't know where he's landed. It does seem like either all or the vast majority of his public stocks are gone.
Yeah, well, it sounds he's claiming all the leveraged ones are gone, but he still has some bought and paid for stocks with no leverage.
Yeah.
But yeah, like he's taken a huge write down.
But yeah, exactly. But he does still have his private company stakes, like Anthropic. So as a result, his overall portfolio health looks okay, but it's kind of surfing on the back of it.
Well, yeah. So it's still up for the year. Maybe now is a good time to the comparison between the down round portfolio,
please,
and situational awareness.
Yep. So
the past 1 month return, and this includes all Anthropic stock and everything, which we don't have in the down round fund.
Famously, we've tried.
So down round portfolio is down in the last 30 days 30%. That's a fair haircut, but that's not. This is not going to wipe us out. Situational awareness is down at least 70%.
Scoreboard.
Ouch. And again, what's left over? A lot of it's got to be Anthropic. Year to date return, the down round portfolio 180%. See, folks, still up 180 for the year after that bloodbath.
Yep.
According to him, they're still up 80% for the year. Again, I wonder how much of that is Anthropic because.
Well, that's it. Yeah, exactly.
But yeah, they're still up 80%. Past 1 year return, down round portfolio 1,350%.
Situational awareness.
900%.
Folks, it just goes to show you can be on as many podcasts as you like, but only one podcast matters.
Yeah.
That's the Down Round podcast.
The core operational status, according to Gemini, down round, holding core long thesis through pullbacks. Situational awareness, fully unwound, margin book to Citadel, operating de-leveraged. There you go.
Okay, folks, that's how it goes. I will say that the other aspect, which is funny about this story, is that one, he got married while all this was happening.
This is crazy.
So he had this big fancy wedding, which is happening while literally like the weekend of his fund being annihilated. Vibes must have been down somewhat.
Married to a woman or a male? Do we?
A woman. Yeah.
A woman. Okay. Sorry, didn't know. It's a fair question.
No, it is. But she is chief of staff at Anthropic.
Oh, that's right. Yes, this is true. He's 24 years old. That's too young to be getting married. I'm sorry.
I guess
how old is
when
Misso?
you're a paper billionaire? I think similar, maybe. I actually don't know. But I mean, there's also a fun Australian connection. The fund was investing in companies that are adjacent to the Australian data center boom.
Yeah, he's got a bunch of data center stuff.
Like Sharon AI. Sharon AI, ticker Shaz, is listed on the NASDAQ. It's an Australian or Sydney-founded data center or neo-cloud business. Leopold's fund owned 20% of Sharon AI, Sydney-founded thing. But the point is, like, a lot of people, his wife's the chief of staff at Anthropic. This guy has got a real clear view on what's going on in future data center build out, basically.
Yeah. But it all came crashing down. I mean, again, a 24-year-old managing tens of billions, that does feel frothy.
It
because he wrote a good blog post.
You know what? When you put it that way, I do think that's trouble. Again, I just don't know. Ken Griffin was like a hedge fund Wunderkind at around that age. Like he was doing...
Oh, this is not going to be the last we see of Leopold, I suspect.
No. And Ken Griffin got very close to being hugely wiped out during the global financial crisis, famously, and then sprang back massively and is now like the 30th richest guy on Earth or whatever. He's got like
Citadel does
$50 million. Anyway, I don't know why that's right, but the point is that he was like the 24-year-old investment wonderkin at one point.
I just don't know.
But
I do know. I do know why people lever up. Like, I get it. Obviously, like you get outsized gains, but like these companies have grown so massively over the last couple of years, year and a half or whatever. Do you really? I mean, did we need leverage? I think I'm pretty satisfied with our return, our 1,300% return.
Yeah,
I'll take it. We don't, come on, folks. You don't need to lever up. Not financial advice, but mine is like, you don't need to do it. No good can come of this.
No, this
work hard, invest your hard-earned dollars into good companies.
Good companies, exactly. Index funds, whatever. I mean, this is like day one of investment school. Don't watch your leverage and watch your concentration or diversification.
Yeah,
right?
So what we have here is like highly concentrated, completely like lack of diversity in many cases speculative and volatile stocks. I mean, it doesn't tick any box, really.
It really doesn't.
Other than the thesis is bang on.
The thesis is bang. But again, I mean, I don't know. I could be wrong, but I'm just thinking back to investment booms of the past. And I guess there was a bit of this during .com, but like strong thesis, but also your kind of argument is I'm investing in this stock because there won't be any other stocks later.
Yeah.
Like this is it. This is the final thing you can invest in is kind of like his thesis, which is like, I don't think either of us make that claim.
No.
Even though we do think it's a...
Oh, no. I mean, look, let me be clear. The down round thesis was shit. People are going to need memory. Far out. People are going to need a lot of memory.
Yeah. And
that's basically it. And fiber optics and whatnot.
And so it has come to pass. But
I want to say in all of this, because yes, in particular, our darling Hynix and also Micron Micro in particular has been dragged through. Their name's been dragged through the mud.
Yeah, they've had the shit kicked out of them.
But these companies are like, these are good companies. Like SK Hynix. I was looking at it again just before we jumped on the podcast. We're talking about like, this is not like crazy town valuations because they're making so much money. A lot of these companies. Not to get into like fucking market chat, but SK Hynix forward PE is 5. Their forward price to earnings ratio is 5.
Yeah.
Their trailing is like 12. Like this is not crazy town. And yes, I know RAM is like a cyclical industry, all this kind of shit. But because they're making so much money, like that is just that's not like a bonkers valuation.
Yep.
And companies like that probably shouldn't be pinging around up 30%, down 30%.
Yeah.
To be perfectly frank, like Amazon going up 20% in a day.
Yeah,
and down
Microsoft up 15%.
Yeah. Just bonkers.
The markets have been...
The sheer amount of money moving around. And I know it's all kind of integrated. It's not just Leopold. It's like, I think also like DeepSeek releasing their V4 Flash, plus South Korean turmoil and like the South Korean government cracking down on leverage for retail investors, plus, CapEx, plus jitters, plus, CXMT, the Chinese RAM manufacturer, is just listed. Every rumor and is, that's going out there is just leading to plus, of course, like algorithmic trading and, like...
The markets are very twitchy about... it's kind of hard to... We'll be hearing more about it soon. By the time this podcast comes out, I think SpaceX earnings are tomorrow. There's a few other ones. But, like, the data points we're getting on CapEx are all over the shop. You don't know what investors want at the moment, right? Like, Google got slapped around really hard for their CapEx. They got a haircut after their earnings.
I mean, but it's way back. It's all come back and then some since then.
Yeah. But like initially, like as soon as the CFO was up and talking about CapEx, you could see the stock
like went down like 8% or something.
Started taking a hit. But then Microsoft...
And this is after, by the way, like absolutely fantastic across the board.
Yeah, like up 80%, like cloud revenue up 80%, search up 17, whatever. Although, they obviously did have like a negative cash flow for the first time in ever
because of CapEx. Yeah,
because of CapEx. So that was also a big part of it. But then Microsoft, while still spending a shitload, came in under estimates, and Wall Street was like, hell yeah, they're being disciplined.
Yeah.
But up 15%. Yeah. Like Microsoft should not be going up 15%. Ever.
No. The companies like this should not be moving like that. Yeah. Again, so much of it is these... God knows, like all of the weird machinations of high frequency and what do they call it? Momentum trades and all this kind of stuff.
Yeah.
But, it definitely speaks to general weirdness. We should sign up for Trump's, we can get his truths quicker.
Yeah, the Truth API, the paid Truth API.
100K a month.
But you get his posts early?
Yeah.
Is that the idea?
Yeah, you get his posts like a few... Like, we don't know how much earlier, but by the sounds of things, it's like milliseconds or seconds earlier.
Yeah.
But like the majority of them are an AI of him as a king and stuff.
Yeah.
So like high frequency trading firms are just like having to ingest that and determine whether it's market moving or not and trade against it.
Yeah, it's kind of crazy. It's like, is there a whole, I guess there is value. I mean, but.
Well, you want his announcements on like...
You want his Iran
the Strait is closed, the Strait is open, the Strait is closed.
I'm about to nuke Iran or whatever it is he says after markets close on Friday.
Yeah.
And then before they open on Monday, he's like, actually, I believe in dialogue. I will say it was possibly one of the funniest things he's ever said the other day with like...
Oh, the Japanese thing? Crazy bar.
That was with the exception, of course, of Pearl Harbor. That's mad. And the fact that no reporter in the room laughed at that, that was a hater. It's like justifying why he was propping up the yen.
Yeah, he's like, they what was it? They've done a lot of...
They've been very good to us.
They've been very good at us with the exception of Pearl Harbor. Fucking crazy.
That's so funny. That's so funny. Anyway. Well, that's Markets Chat. That's Leopold Aschenbrenner.
Yeah.
Aschenbrenner. Sorry. I apologize to our German listeners, of which I guess there are 5.
Entschuldigung.
Auf Wiedersehen. After the break on the premium episode, we'll probably keep this chat rolling. We're talking a bit about all this math shit that's going on.
Yeah, and math. Are mathematicians dead? Is it a hobby? Is maths going to turn into a hobby?
And God, it breaks my heart to hear that. And I don't know, pretend there's a grab bag of other things that might come that we might talk about as well that have happened this week. But if you're not a subscriber to Down Round Premium, what the hell are you doing with yourselves? Get to downround.net, click on the purple monkey when he pops up on screen, and sign up for Down Round Premium. It's I'm not even going to say the price because I don't remember it. But just know that it's good value. You get an extra episode every single week on top of the free one.
You get access to market-moving material earlier than other people.
You get market. Well, I mean, yes, often the episodes are released 3 or 4 days after the markets have moved. But like, you will feel nice knowing that we were right.